Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
All right, guys. I'm a little bit late. We are getting some data here. Let's come and look. I'll minimize that for a little bit. All right. So, US PCE price index. That's not the one that I want. Price index month over month. Spot 1 versus an expected spot 2. And same with core. Spot 1 versus an expected spot 2. So a gentle, I would call it a gentle rise in the treasuries here. Back to 109 even. Let's come back over to the charts now. Well, so here was the Federal Reserve meeting, and then yesterday it, just kind of as the day went on, they kind of floundered a little bit. I wouldn't say that it was like a huge drop lower, but, not good. Now we are kind of pushing up into there. I think we still got some interesting area here up until 04 half. Then we can see if we can, kind of close up some of this. I don't know if this particular news is that significant though. S&P 500 quite a bit lower this morning. Oil also dropping here below 69. This is a joke. Been at that price for way too long. Okay. Gold, silver, silver's really bad this month. That drop right there, from there to there, is pretty bad. Kappa also not looking so hot. Japanese yen. Okay, they're about where their treasuries are. And the dollar kind of. Bitcoin. Ooh, okay. So we've got a bit more of a protracted decline in Bitcoin. They have failed 10,000 and dropped all the way to 95,000. Did I say 10,000? 100,000. 100,000. You know what? They need to do a stock split over there. Okay. Anyways, how are you guys doing? Let's see here. We still got some days next week, right? I don't know. I might as well stream on Monday and Tuesday. It's kind of a little bit of a weird. Now we've got Christmas on a Wednesday. Yeah. So if we stream Monday, Tuesday, and then we come back on the 2nd, that would be a Thursday. So you get 7 or 8 days off. I think that's good. I think during that time, I will probably try to record some videos. Maybe work on Rust. All right, but back to what I was doing. Should I do? Okay, no. First, I gotta try and figure out what's going on here with Rugsoft. Okay, I installed version 3.22. I get the below errors. I use the log function in my own developed strategies. Are you using the log function? There is a difference in how NT8 uses the log function compared to the .NET log function. Okay. Log level does not contain a definition for information. That's so weird. does not contain a definition for information. That's a weird error. I can't explain why it's doing what he's showing me here. Squeeze must be close in IWM. Wait, what's that? Oh, am I not updating ES? Nope, can't be right. No, I think we're good. Yeah, we're good. By the way, good morning, Octavius. And what is now? What are you talking about? Romnus fat squeeze must be close in IWM. What is that? IWM. iShares Russell. Good morning, Izzy. No. You know, Russell has just like underperformed for too long, man. I tell you that. Tell you that much. Think it's gonna get crushed here? When you say squeeze, you mean like the longs are gonna get squeezed out? I'm concerned that we could have a squeeze in like everything. You know? Oh, upwards. Oh, okay. Maybe you could catch up. Who's speaking right now? Is that that's Williams, I see. Right, but back to the issue at hand. He uses this method log text log level dot information. And it says log level does not contain a definition for information. But I cannot do anything with log level like that. Unless I've put something somewhere else. Wait, where does that come from? It must be coming from...
Block by.
I got it. I got it. Wow. I have so many more log messages in this space strategy than I realized. Holy crap. Williams says the trajectory is for more rate cuts based on the data. That should be a boost. I think that this little further move up is because of Williams. Mm-hmm. Tori Horton, good morning. Almost there. Okay. Okay. Okay, double checking now. Okay. All right. Okay. All right. So for those of you that have the indicator suite and are in the private Discord, I have posted a slightly newer version of the indicators over there that fixes an issue with the advanced based strategy. I guess I didn't really think of that as like a part of the indicator suite. Like I don't have any documentation for it or anything, but people will kind of wanted to use them and do things with them. And so I've included that in the DLL. So that should fix that problem. So what was happening was the strategy was defining a log level that was obscuring the higher level one, and that was screwing things up. So that should fix that problem. So now I got all that out of the way. We can go back to this. So what is this? Well, remember we were back testing and I had said, okay, what if let's look at the R squared, and let's not just look at whether it's above or below 0.5, but also whether it's rising or falling. And if it's below 50 and it's falling, then that should mean that we're like very clearly into a mean reversion market, right? Octavia says it looks like a meta order. No, I don't think so. Well, I wouldn't. I mean, I guess it is a meta order, but I wouldn't look at it that way. I think that this one was because of the CPI news, or sorry, PCE news. This one was because of Fed Williams' comments. Fed Williams was speaking. He's saying that the data suggests that we should do more cuts. He thinks the data suggests we should do more cuts. So I really hate to have to dive into this again, because it's political and people might not like politics, and the thing that like makes me nervous about it is that now it's into this is maybe something negative for Donald Trump. I don't think that it's necessarily negative for like it's against Donald Trump. It's just that it is what it is, but I'm afraid that like Donald Trump supporters might interpret it that way. Okay, but I think that what's happening here is that there are the majority of the Federal Reserve Board are Democrats now, because they ousted like 2 or 3 of the major Republicans on the committee and replaced them with absolute retards. No, they're not absolute retards, but there are some things about the new Federal Reserve members that I'm kind of like, really? Do you really be on the book? Because some of the things that they say, they're like way too dovish. They're just way too dovish, and I feel like that they're more political appointments. But I digress. There's certainly, they're not the first political appointments on the Federal Reserve Board ever, right? Anyways, so I think that they are kind of all leaning towards being hawkish once it seemed like Donald Trump was going to win. Maybe in part because they think that tariffs and everything will create inflation, and maybe in part because they just don't want Donald Trump to do well. I think the whole thing is kind of doesn't really make a lot of sense. Like, Goolsby is a political hack. Yeah. Is that the one? This is like the most recent two that I've been like, eh. You're right, it is Goolsby. Goolsby is the one that I'm kind of like. He's just always dovish about everything, and I'm not sure that his where his economics come from. Anyways, I think I'm speaking out of turn on that one. I don't think that I should be calling people on the Federal Reserve political hacks, because I don't really know them enough or what's going on there to make that kind of a level of an accusation. But I will say that there are a lot of things that I hear out of Goolsby that I'm kind of like, really? Okay, whatever. I think that they're being hawkish because of that. Now, like, the thing that I think is kind of weird is that if Donald Trump is really going to come in and, like, damage the economy, okay, like if tariffs and trade wars, like, really harm the U.S. economy, well, okay, first of all, it's not going to be across all goods necessarily, okay? It's going to be across certain goods that are already, like, artificially low anyways. So the overall inflationary effect of that is not so clear cut. You can have a situation where, like, the value of these things move up to where they probably should be, and the value of other things will come down in response to make room for them. And so you wouldn't get across the board inflation. Right? This is one of the reasons why we're pretty certain that the inflation that we saw was due to the excessive the combination of excessive monetary stimulus, fiscal stimulus, and supply chain disruptions. Because if it was just supply chain disruptions, then you would only expect to see inflation in the goods that were being disrupted, and you wouldn't see all goods disrupted at the same time. But what we saw was an across-the-board increase, which suggests that it was more due to monetary and fiscal policy, or that was at, I think that each one of those components contributed about a third. Okay, so if Donald Trump has a trade war, you're not going to see inflation across the board. And so, like, the net effect on inflation is not really so clear cut. And on top of that, if it's really that bad, it will start to have a recessionary impact, which will be deflationary. Like, there's a scenario here where the actions that Donald Trump takes on day one are really negative for the economy, and they have to cut rates to deal with it, Why? I need to update my ES? What's wrong with my ES? Are you saying that just because it's all gray? Because I changed it to be gray. I changed it to be gray, but it is... Well, actually... Oh, well, that one's a 1 minute. Oh, that one's a 5 second. That's why. That's why that one looks like that. Here's why my 1 minute. Yeah, no, it's fine. For sure it's fine. There you go. Not to mention that the MES over here... Oh, actually, this MES is not right, is it? It's on Z. Why is this on Z? ESH25. Okay. Thank you. I misunderstood. Yeah, I gotcha. I think you were talking about the main chart. Okay, anyways. So like when I look at that Federal Reserve meeting, I'm just sitting here like, okay, how can you have an emergency 50 basis point cut? And now 3 months later, like none of the data is really different. It's not like we had some sort of, you know, incredible turnaround in the economy since then and now things look really hot and yeah. No, it's like the same. So why are we hawkish now? Makes zero sense. Makes zero sense. Only and I think that Williams here is being consistent. He's saying the same thing that he was saying 3 months ago, that probably we continue to cut rates. So the markets jumped on that, but only a little bit. That's what's going. All right. I spent like way more time than I thought I was going to on that. But because I want to get into the indicator here or the strategy here. So what's with the strategy? We were looking for, okay, both when there's a lot of trend based on R2 and when it's increasing versus decreasing. And I always kind of thought that the strategy where we're taking trades based on cycles should work better in a relatively range-bound market. A relatively range-bound market. And when I did the back test, it selected the one that was the range-bound. So that was what I expected to see and seemed correct. But then I said, okay, but there's also this thing about like when you trade off of the threshold, when you use the threshold, and whether you're doing it during the most active times. And so really what we should do is we should limit it to the most active time of day to see if it really should be using the threshold crossing at 0 versus the extremes. And now that we have done that, the first thing is that it is using the one where it's not using the same one. So the one that we were using before was use rising true, use trending false, but rising is false and trending is false. This one, it's saying don't use trending. So it's only doing it when, so it's saying only trade when trend is increasing. Or actually it's not that, it's only when it's decreasing. Only trade when trend is decreasing, which is very, very interesting. But it is still a mean reversion one. But then what did it pick for FT threshold? It picked 5 instead of 0. So that is interesting. And what's the difference with this one? This is, no, that's FT threshold of 5. That's FT threshold of 5. So then what's the difference? Use rising through use trending. Oh, that's interesting. Oh, okay. They're the same because one is trending true and one is trending false, and they don't matter. Yeah, they're the same thing because it's not even using that. Now, what's this one right here? This one is all of them false. Oh. All of them false. I think all of them false would just result in not filtering at all. So that should take more trades, I suppose. Oh, by the way, what are we optimizing on? Max net profit? Okay. Okay. And we are including commissions and everything. Okay. And what about this one? Yes, and this is the one before where we're doing true, true, but true, true, false, false. Is this one right here. Okay. So what I'm going to do, new strategy analyzer tab, this one versus this one. And we're going to save history. We're going to, oh, it's going back to 2020? Should be 2019. I don't know what's with that. So it kind of theoretically makes sense to me. So again, if this is the way that our R squared works, right? And we're kind of splitting it up into these 4 different quadrants, right? When it is declining, this is actually, we should do it like this. It should be like this. Right? Here's 50%. So then you get this first quadrant, second quadrant, this fourth quadrant. Okay. So the difference is, and let's name them 1, 2, 3, 4. Okay. One of them is trading only quadrant 4, and one of them is trading quadrant 3 and 4. And trading quadrant 3 and 4 makes more than only trading quadrant 4 because you take more trades. Essentially, is what it's saying. Makes sense. But it's also, again, it's saying FT threshold of 5. Whereas before we were doing like a 2. So that makes sense to me. I was using a 2 because that's what worked in the treasuries. But actually, the interesting is that the cross kind of works. But if you use the 5s, it gets you a little bit earlier and gets you a little bit better of a trade, I think. But I'm okay with that one being the one. Now let's come in and look at the deeper stats on this. Okay. So their performance is pretty similar. This one is definitely better. Rundowns aren't the greatest. Oh, ouch. Now that is very curious. So part of me has been like, are we just curve fitting it a little bit? Well, I think in the case of this oscillation, I haven't changed the period at all. I haven't been trying to optimize the period. I've just been using the indicator's default value of 20 because, my previous backtesting said that 20 worked best. And all I'm really doing beyond that is adjusting methods of determining my stop and targets and adjusting, when we take it based on how much trend there is in the market, right? I've been getting it to backtest profitably through a pretty wide variety of parameters and everything. So I'm kind of, and there was a little bit of like, okay, if we make sure that we include slippage and everything, that kind of hurts. And then you kind of see that like, okay, maybe there's like a little bit to it, but it doesn't overcome the slippage and so forth, right? Like maybe there's something to it, but we're not necessarily competitive with that particular edge. But now I'm looking at the max average excursion. That is wild. Maximum adverse excursion. I've never seen it quite like that. So does that tell me that there's really something to it? No, because we'd have to look at the favorable side. Because these ones could all possibly still be favorable. These are just ones that like, that just immediately went stopped out. These ones, yeah, that's probably what it is. The reason why I got this versus this is these are ones that like stop at the end of the time or get an opposite signal or something like that. Okay, but with MFE, okay, maybe not. I think what it's saying is that there are a lot that just go to the target or go to the stop. And you're kind of getting this sort of a thing based on how much volatility there is during different days of different amounts of volatility. That must be what's causing that line. I've never seen that in my backtest before. That's really interesting. So does that make... Oh, okay. Because I was saying that my entry efficiency is pretty good. Okay, that's interesting. That the ones that aren't super efficient tend to be bad. So that is really curious. But going back here to this, to the optimization graph. Aha. That's more like what I expect to see. Basically, that the one where you're taking it across 0 doesn't work. But then the other ones do. And it's favors the long side. But interestingly enough, you go further than that, there's a problem. So I think that you can say when you cross the 5, so what it's doing, you've got this oscillator going here like this, right? You've got like the top and the bottom, right? And it's basically saying, and let me make sure that I'm getting this correct here. It's saying when I cross above 5, yeah, when I cross above 5, enter long. Okay, so it's saying right here, I go long, and right here I go short. Oh, that's weird. Okay. Well, I mean, I know why I have it like that. That's probably not necessarily the way that I want to do it. I maybe want to do it here and here, but that doesn't matter. But it's actually, it's taking it momentum. -5. Right? If cross above FT threshold of 5, then enter long. So when it gets to here, it goes long. Which is, and if it was a mean reverting trade, it would be when you cross below -5, you go long. Or when you cross above -5, then it would be like right here, right? Then it would be right here. So, and when we come in and we go back to the back test, well, there is okay, so there is a section of them that do well on the -5, but there's a section of them that do really, really well on the +5. Now, you might be able to combine them. You might be able to say, yeah, I wish that I had these parameterized as integers rather than so I could see. But I think what you do is you say, going back to these quadrants, 1, 2, 3, 4. I think that you say on 3 and 4, you trade the mean reversion, and on 1 and 2, you trade the positive. Want to try it? Let's try it. So I think what I want to do is I want to copy the strategy again. Call this degenerate gambler 3. Copy all this over. Let's change the name of it. Top 1, 2, 3. Here. If R is rising, R2. Oh wait, is it called what? My R2? Yeah, my R2. Bunch of logic. If is falling, my R2. Bunch of logic. And we should have all of this should copy into here. And all this copy into here. There we go. Make sure and get all of the tabs correct. Okay, and on all of these, I get rid of the R2 filter bit. rid of that whole method. Okay, and what will the difference between these be if it's rising? What were we saying again when we go like this, right? If the trend is rising, then we want to go with it when it's positive. And if it's falling, then we want to go with it when it's negative. So when it's falling, we want to do this. We do the opposite of these two. Okay, here's the old entry exit code that we can get rid of. Oh wow, that compiled. Okay, also we should change a couple of things up here. That we should change the FT threshold to 5. Stop and target, good. Okay, the rest is good. Let's get rid of some of these other properties that we don't necessarily need. I'm probably gonna like go back and like add them all in, huh? That would be funny. Regular back test, Degenerate Gambler 3. Let's still limit the time frame. Go to 2019. Commission. Take slippage. Run. I'll be a little bit disappointed if this one comes back negative. Hey, that's not bad, actually. So it's a lot more trades that it takes, right? In fact, it's going to be a lot more trades that it takes. Oh, interesting. Oh, really? So there are not very many losers at the 0 favorable excursion. I mean, this whole section here. Actually, can we take it by, instead of dollars, take it by ticks? Right. Like, look at all of this right here. That's a little wild. Now I'm thinking, that the stops and targets that I take should be different depending on whether I'm on the trending side or the mean reversion side. Okay, well, hold on. Negative. We need to compare it to the just taking everything. Yeah, that's what I thought. Similarly, and just doing a few sanitary tests here. Sanity tests, not sanitary tests. Okay, doing everything mean reversion actually seems to work better. Oof. But the drawdown sucks. Interesting. Change the name of things here. If Seth can copy and paste things correctly. Good grief. This is where I'd prefer to be using Helix. Okay. Okay, here's what I'm gonna do. I'm gonna comment this whole bit out. And we're gonna do an optimization here. Stop targets. Is the S&P starting out a little bit bearish on the first bit there? While we're waiting for that, we're going to go back because Bodybag was saying if Trump places the tariffs he campaigned on, we won't have a recession. We'll go straight to a depression. So, not necessarily, actually. So I've seen some pretty good analysis of like, okay, if he puts on a 10% tariff or whatever the tariff is. And Goldman was saying that each change in the tariff would change inflation by only like a tenth the percent of the tariff or whatever, and only for those particular goods. So the actual net effect on the economy of the tariffs that he campaigned on is actually not as dramatic as you would think. It was not as dramatic as I thought. So it is, I would say, a negative economic impact overall, but it's not like the end of the world. And that's kind of important because there's a lot of other things that he's doing at the same time. So you can very well have a case where, yeah, he just absolutely screws up trade, and that really hurts a lot of businesses, but that the overall economy stays strong because of like changes that he's making in the tax code and things like that. Like there's just too many things changing all at once for us to really make like a really certain, you know, conclusion on what it's going to be. I have a weird feeling the next 4 years. I mean, I think that they will be, but I feel like that Trump's first 4 years were kind of rough to some extent. It's kind of funny, like we all remember it, the whole trade war thing with Donald Trump. It's like the American public like collectively forgot about it, you know? It was like people don't remember that for some reason. What's with that?
By.
Anyways. Okay, so of course it likes the big stop, but where does it like the targets? It actually likes them more at like 0.3. Oh, target 0.1. I thought so. And this one should be more like what we were getting, where it's like 0.2 and 0.5. Or 0.2 and 0.4, I think is what it was selected. You appeared in 43 searches this week. It's something I'm noticing about LinkedIn. There's a lot of people that are like, oh, you know, LinkedIn is stupid. All the people that are posting there, they just post stupid stuff and it's not really very effective and all this sort of stuff. And, oh, wait a second. That's not right. Did I not like save and build here? Yeah, of course. What a waste. Anyways, and what I'm noticing is that LinkedIn, there's so many people posting jobs and applying to jobs and things like that, that LinkedIn has to find some way to filter it. And so especially when you're filtering for people, it filters based on how much activity you're doing. How much activity you're doing. And so like to get the most out of LinkedIn, you have to like post stuff regularly. And if you go on LinkedIn and you're like, I'm an expert in this field, and you're constantly posting and dispensing advice on that particular field, then it really boosts you, and all of a sudden you get people messaging you about things that probably you yourself think that you're way underqualified for. Yeah, okay, that's a little bit different. But what is it picking up there on that one? It still likes the crazy stop and target. Now, wait a second. How is that? Oh. Is it because... Let's see here. Biden administration announces $4.28 billion in student loan relief for borrowers for work and public. That's insane. I mean, that's gonna be like immediately rescinded, right? I think that it would be one of those things where it's like, okay, well, he did it, so now for Donald Trump to take it back, maybe you're not allowed to do that. Yeah. You know, on this point, this reminds me, the other day somebody was saying, you know, if Joe Biden really dislikes Bitcoin and really kind of wants to mess with the next administration, what he should do is he should sell all the Bitcoin that the government has before Trump's term. I was like, oh, I don't think that would actually happen, but like, that would be kind of funny if they did that. All I know is Biden isn't doing anything himself. It's obvious the executive branch is being run by pissed off college. Yeah, I think you're right. I think that it's like, I think, okay, let me put it this way. Okay, I do not think that Biden is a strong executive. I think that he is very much controlled by his advisors. Of course, like, he's ultimately in charge, but I think that Joe Biden this whole time has been kind of frustrated by his advisors and like the way his handlers, I guess you could say. And I think that if that is truly the case, and I mean, everything that we've been getting is that, like, so the thing is that we've gotten new news that essentially says that, you know, they've absolutely were covering up Joe Biden's mental decline, and they went to quite extensive efforts to do it, right? Okay, but the thing that we don't really know is who was actually running the country. Like, to what extent was Joe Biden making decisions? Who were the people that were really pulling the strings? Some people have been like, well, it was actually Biden's wife, or it was actually Obama, or whatever. But I think the most likely scenario is that it was like his collective advisors. And if that's the case, then I would say that Joe Biden's term is a perfect example of why, like, design and leadership by committee doesn't work. Okay, so this is a little bit more like what I thought it should be. Stop and target 0.5. That's curious. What impact do you think the $6.5 trillion options expiration will have today? Well, I don't know. I mean, I'm kind of feeling like that that the market shouldn't do anything all that huge. Like the treasuries have kind of come up and found a new base, but I'm not expecting them to move much more. Whoa. Okay. So what it's telling me is that your FT thresholds changes. Keep it to 0.4 for funsies. Oops. Oh, let's do it like this. Oh, no, we're not quite done. And there's going to be all sorts of errors. Of course. Guess I get rid of this bit. Threshold. Convert. And the ones that we were doing where it was reverting. actually the other way around, right? The revert one. You want it when it's an extreme, and the trend one, you want it when it's a tiny one. If you want it like that, negative. Red trend, threshold revert. Stop. Trend. Target. Trend. Oh, I missed one. Revert. Revert. Let's try it. Hopefully I got it all correct here. Hey, it's not bad. Yeah. It does seem like there's a lot of losers that you know, a lot of big losers. And you kind of have to wonder if you bring those in, but I feel like something's wrong. The win rate should be better than that. Oh, Ghostbase is going to be on CNBC. Okay. Going to do a sanity check on me here. $25 times 25. All right. Oh, it's actually 26 times 26. No, that's not right. Oh. That's 51 times 51. There we go. What? What do I do? Have child pickup, or I have duties here to drive children. But by the time I come back, this back test will be ready. So, also minimize everything. I'm worried. I tell you what, man, yesterday I did this job interview, and they wanted me to interview on site, and their on-site campus was incredible. They had like this huge cafeteria and everything. I was like, I wouldn't mind coming here every day. But they want to start at 8 o'clock. So I'm like, what do I do with my stream if I have to start at 8 o'clock? Do I just like start it, talk for an hour, and then, you know, kind of makes me a little bit nervous. But then there's days like today where I'm kind of like, well, but you know, there are more productive things I can do with the time sometimes. Anyways, so. And then there's also this thing where it's like, you know, maybe if I don't talk, the stream would be more popular. So anyways, I will be back in about like 10 minutes, all right? And we'll see the results of that back test. See if I did it all correct. And if that's what we want to go with. All right, we're back. Oh, the music stopped. That sucks. Did I miss anything? Yeah, well, the S&P 500 has come back a little bit, but interesting. You know, they kind of started out with a sell in the S&P 500, but it looks like they're doing okay. All right, let's look at the backtest, shall we? Hopefully it's not done. It's only done 780, 790. Not saving the history. It is doing 4 years. We are using a decent amount of memory as well. It may just be too big of a backtest. I kind of been thinking that we should upgrade to 64 gigs of RAM. Given that was like 20 minutes. So this isn't going to finish before we're done here. So I need to stop that. Yeah. Yeah, I need to stop that. And let NinjaTrader clear the memory out here. Let's close these other analyzers. Save history faults. 2024 like that. You get this issue where like doesn't stop. So it's still going. Now it looks like the backtest did stop. It's just like not releasing the memory. Well, I'm concerned about like losing my data here. Let's try just closing that window. Had another strategy analyzer in the background that was using a lot of memory. We got Goolsby speaking. Let's not. Should we go all the way to 25? Let's just do a slightly. Let's just do a slightly more limited test and go from 10 to 10. That should be more like, 100. Oh, we got the instrument, of course. Mission. Footage. Max net profit. Okay. Okay, so going back, Uzi was saying that Biden is announcing another Ukraine aid package totaling $1.2 billion per Reuters. So now that is one where, like, I think that the money goes, but not if we're going to have a government shutdown, right? And the whole thing I was seeing this morning was that the Democrats don't want to pass the clean bill, and so we are going to get a shutdown. So this gets interesting. I come to my political blogs. Are you saying anything about this? Oh, okay. Johnson, well, you certainly could have fooled us. Plan A for Speaker Mike Johnson was to collaborate with Democrats to pass a continuing resolution and partial omnibus with lots of pork for everyone. When that collapsed in a hailstorm of recrimination, Plan B relied on House Republicans to unite on a purer continuing resolution with a debt ceiling lift. Once again, House Republicans refused to take yes for an answer in an embarrassing floor vote last night. Now Johnson is telling reporters that a Plan C to avoid a government shutdown tonight is emerging, although no one knows what it might entail. Something about stump water at midnight of a full moon, perhaps. Whatever Plan C might be, it can't do worse than Plan B did. House lawmakers from both sides of the aisle joined together to reject Speaker Mike Johnson's latest stopgap funding package Thursday night. With 1 day to spare before a partial government shutdown is set to begin, the House voted 174 to 235 against the package under suspension of the rules, which required 2/3 support from those present and voting for passage. 38 Republicans bucked leadership and President-elect Donald Trump, a staunch proponent of the revised bill. Why did Johnson do it under suspension? He couldn't be sure to get support from his own rules committee, that's why. That might have been a hint as to how well Plan B would work, especially since the much skinnier continuing resolution cut Democrats mainly out of the loop. Hakeem Jeffries warned earlier yesterday that House Democrats wouldn't rescue Johnson after changing the deal, although that was hardly necessary. So what are the options for Plan C? Punchbowl Nose looks at 4 options, the first of which is a non-starter, putting Plan B up for another vote. This time through the Rules Committee. That would be a great plan, except for that you'd need all the Republicans to vote for it. Number 2, a negotiated settlement. Although Trump might not like it, Democrats have a price. Johnson can get together with House Minority Hakeem Jeffries and figure out what Democrats need to support a bill to fund the government passed tonight. The problem for Johnson is this runs the risk of both dividing the House Republican conference and angering Trump by trying again to cut a deal with Jeffries. Democrats have to be convinced Johnson won't renege again, as well as being able to deliver enough votes. Sources close to Jeffries say they can deliver the votes. The question is, can Johnson? Drop the debt limit increase. If Johnson were to drop the debt limit increase from Thursday's bill, that might be an attractive option for Republicans and even some Democrats. Remember, there's a 3-month continuing resolution with disaster funding and an extension of the farm bill with a shutdown just hours away. This isn't a bad move. Number 4, a short-term continuing resolution. There was some talk inside the GOP leadership and among rank-and-file members about a short-term continuing resolution to fund federal agencies until early or mid-January, but this wouldn't change the current reality. Johnson is a very small minority. He has to deal with volatile incoming president, face down an emboldened mega billionaire with social media platform, and has a generally uncooperative House Republican conference. Yeah, it was going to be interesting to see, because I think that Elon Musk is still kind of learning on the whole politics thing. So, okay. We got the results here, and the top one is giving me a sharp ratio of 0.5, and that is with the limited time frame, the commissions, and slippage. So I'm really shocked. And what are they giving me? They're giving me trend 2 and revert 3. That can't be right. That can't be right. It seems like doing it at 0 just doesn't work for some reason. Oh, no. Doing it at 0 does work. Doing it at 0 does work, but for trend, it likes it more at 2, 3. What is this? Saying for FT threshold 10, it likes it 2. But for revert, I thought that we were getting a 5. Yeah. So for that, I thought it was a -5. This one spot right here is clearly better. That's better. I don't know. I wonder how much of that is goal seeking though. You know? It is only over 1 year. Maybe that I get the 5 when I go over a larger time frame. Oh, okay. It was like, how come this one is so little compared to some of these other tests? But these were tests over 4 years, so. I don't like... Okay, you know what I'm gonna do? I just want to see if it's the targets. So there's this other optimization that I think we can make, and I'm not quite sure exactly how we work it out. I'm kind of thinking that at that point, we need to go to machine learning. But can you go and say, okay, when we're doing mean reversion, you want to do mean reversion when you get to like a 2. But if you have an impulse that's really big, like a 12 or 25 or whatever, then you want to turn, bail on it, turn around and do something else or something like that. So I'm really curious. I'm not really sure how I would sort that out, but I think that that would introduce too many different branches and scenarios that I would have to utilize machine learning to do it. Goolsby is still speaking here, and it does seem like that the treasuries are continuing to drop. Let's see here. What's Greb say? Goolsby trying to undo some of the damage from Wednesday, saying rates can come down by a judicious amount next year, trying to give a shot of hope back to the market? Question mark. Well, okay, so the thing is that Goolsby is always dovish, though. But I don't think that it's a mistake that the Federal Reserve is having these two particular guys coming out, right? So, like, maybe it is... oh my gosh, what? Sorry, the result that we just got there was not what I expected. But it still came out to the same set of parameters, right? A 2 or a 3. See, for the trend threshold, it definitely needs to be a positive one. But for the mean reversion thresholds, it's almost like it doesn't matter. It may not actually matter. So if I come back here and I change these to 3s. This would be like 1600 iterations, right? This one, I want it to maximize sharp ratio. Oh, oops, I forgot to change that by how much you increment to 5.1. 1. 1. 0.1. So it should be 4 to the 4th, right? This is 256. Oh, it's 64. And that might not be right. Yeah, so something wrong. There was something wrong about that. Try that again. So I'm concerned about the mean reversion one. It doesn't matter. Like, oh my. The optimal setup. Well, what was the optimal setup though? Target trend 0.1, stop trend 4. Target revert 0.3, stop revert 4.4. Okay. That doesn't seem to make sense to me. Why did it? So it picked this one. No, it picked target trend 0.1. So always with the wanting the biggest stop. I am detecting a hint of overfitting here when I'm doing it on chart. Because look, there are some on here that the total profit on them is a lot more. What's this one? Target trend, stop trend are the same. Target revert and stop revert are 0.3 and 0.4. Ah. And part of it is I don't like the number of trades that they take. You know? You know, I've never tried backtesting to minimize drawdown. How about we try that? Or ANG says, good to see you. Yes. And I'm thinking back to Greg's comment, like, did the Federal Reserve not like the reaction of the markets and so they intentionally sent the doves out? Or was it more like the doves really disagree with this notion and that they're the ones that wanted to go out and talk? I don't think that it's a coincidence that, like, you have Goolsby out there speaking, for instance. I know, I get a little bit suspicious when I'm optimizing on stops and targets. Yeah. Anyways. I do kind of like the change that we've made here for 3, because that means that it can take trades during all types of markets. It's just it takes a slightly different trade, right? I guess the one, there is still the top level filter though. Where, you know, it's with the trend. We could say, oh no, this is so interesting, because what I'm using for R squared is different than what I'm using for determining the trend. And and it's always still trading in line with the trend. Interesting. See, those parameters seem to make a little bit more sense to me. Well, I'm a little bit worried that, like, optimizing for the Sharpe ratio is like overfitting it. But I like that these ones are more reasonable, like targets 0.1, stop 0.3. And then on the reversion ones, we're doing 0.3s. Although I kind of would have thought that for the reversion ones, they would be smaller than that. So I'm not quite sure what to make of that. Except for that with the reversion ones. Oh, geez. Okay. You see, there's a bunch of different branches. So, like, there's where we're at on the amount of trend. But then when we're saying that we're mean reverting, I'm still only taking a trade in line with the trend. So maybe then I can say, okay, well, when we're mean reverting and we're in line with the trend, I do this. And when we're mean reverting and we're against the trend, we do this, right? Like, there's so many different branches that you could go and have machine learning kind of sort out what it should do in all of these different situations. Of course, you would have a very strong tendency to overfit in that situation. But, oh, and by the way, I did -3 and 3. Did they all come out to be, okay, wait. I just have this one be none, and I'll have this one be, FT threshold revert. Yeah, it likes the 3 better for some reason. It likes the 3 better for some reason. They just did a vote, and it failed. So in Congress, so okay, I'm gonna do it this way. I'm going to take 0.761. No, I'm going to we're going to use 3 and 3. No. We're going to use -3. No, well, I don't know. Let's keep it. And we're going to use 0.2 and 4 for everything still. I'm going to run that. And that gives me a Sharpe ratio of 0.36. But a higher total net profit. Because it takes more... No, it doesn't take more trades. It takes less trades. What was this one doing? Oh, the target trend was a lot smaller. I see. Let's just leave it like that one. But then I'm wondering if on the is falling R2, if we get rid of this, we tell it, don't filter based on trend when we're mean reverting. Okay. So it takes more trades. That doesn't change very much about the performance of it. It performs a little bit worse, I would argue. Let's flip them. That's really bad. Okay. Let's go back to these. This one is just like so crazy. .98. There's no way that this survives the 5-year test. There's no way. Oh. Oh! In fact, it does not. Ooh. Wait a second. That's curious. Why is that so bad? We never tried the 5-year test on this one. But based on everything that we've been doing, this should survive. Unless I screwed up somewhere. Oh, okay, yeah, it'll survive. Performance of it is a little schizo, though. But I think that is what we're supposed to see, right? Yeah, because this is a degenerate gambler, right? Would be better if both the long and the short trades were profitable, right? There's just a difference of about 2% between the two of them. I don't know, man. It just kind of shows you how you can get the backtester to show you something that's profitable, and for you to trade it, and for it to be profitable for you to trade it. But then in the long run, it will stop working at some point. And that is kind of the way that what I expect to have happen with this, because I'm taking it like a pretty simple technical analysis concept that I think is really flawed. But I'm trying to do what I see other people do that claim to be having success, right? So, like, I think that the results are kind of backing up what I've been saying, right? But there are surprises in it, too. Well, if we do this again, we do the 5-year test on this one. And then -3. Ooh. Ooh. It's really bad. Oh, that's so interesting. I think we are curve fitting it. I think that some of the things that I didn't think that those were going to make such a big difference. But it seems like it is curve fitting. How come I'm not saving history? There's that, like this right here is basically like your left tail. Like this one right here, that shouldn't, you don't want that one. That's, how much is that in terms of dollars? Currency. 6,000? Wow. So one trade is responsible for $6,000 in losses that you could just put a stop in here and filter those out. There's also this thing where, like, I could have an absolute stop. I could have an absolute stop and move all these over to there, and we would have better. On the MFE, oh man. Oh yeah, because yeah, your biggest loser is going to be a lot bigger than your biggest because of the risk reward that we're taking. That's crazy. Oops. Math thought. Math thought min. Needed to be capitalized. Okay. This should give us a good $20,000 more, but I could be wrong. Could drastically reduce our oh, it did, yeah. Oh, so interesting. So why did it not work the way that I thought? Oh. Oh, interesting. Okay. I see. I get the picture. That doesn't improve things because these losses are actually maybe bigger than they would be in real life. Come back to this one. What does curl do? Like curl in general? Where are you coming into the context of curl? Curl basically is just a command line utility to send, in Linux, yeah. Just a command line utility to send a request. So like if you want to test a web endpoint, like you have a data service, right? You use curl to call that service and get the JSON back or whatever. It's kind of like a simple way of back testing it. Yeah. So you'll often see, I'm betting that you're looking at some API somewhere and they're saying test it out, and then it says curl. So you can just copy that curl command and it will send the request. But they often will give you like Python code or something like that to do it with too, which is always nice. This right here. Now the ultimate test. If this doesn't work, then I think I overfitted it. Yep. Okay. Oh, now that's interesting. Wait a second. How is that possible? No way. Still worse on that side. Okay, so I told it go for like really small targets and equal risk reward. No, I've got something's wrong. Something's screwed up here. There's got to be a bug. Because on the short trades, on the short trades, it's taking more risk. That's why it's getting that. There's a bug somewhere. Where are you? It's got to be on these shorts. Got to be something like these are spelt wrong or something. It is right there. Okay. So basically a bunch of that back testing that we were doing was faulty. Oh, wait. And then, oh, wrong one. Let me give it more room to breathe. No. Did that mess things up that much? Oh, it's time for me to get going. I want to just do this last little thing. Make sure that I'm not crazy here. Board. Small little mistake there. I look at that. It was like the number of iterations was clearly wrong. I wish they had a little thing that would like estimate the number of iterations down here before I click the button, you know? Oh, here, platform. And now I'm working here. I click the button, right? Actually, no, that's better. 512 is more like it. Ah. Oh, sorry, I missed your other questions there, Captain Price. But yeah, sometimes, and you're given installation instructions, that will essentially tell you to send a web request to grab a download and save that download to the disk and then run something based off of that. Yes. So I'm thinking here, I don't like going over necessarily because I want to make sure that the toddlers wake up at a decent time. But they're probably going to go to bed late tonight anyways. I don't know. I do want to abort this though. I only want to do 1 year's. I want to fit it on the 1 years and be able to then go and do the larger bit. Right? So. So all of the sudden, some of the changes that I'm making now are kind of like, they don't line up with what my previous testing says it should do, and are kind of showing signs of overfitting. That's a lot faster, right? It doesn't need as much memory to do it. We should check our memory usage though. How much memory are we using? 15,000 megabytes? I don't think that the save history property is working correctly, to be honest with you. Because come on. Yeah. All right. Hold this. Oh, where'd it go? There you go. Well, it's almost done. But this should make some of our back tests a little faster. Because it has to, it's basically, it's saving all of this information about all the traits that it took in memory. And we're taking thousands, if not tens of thousands of traits. So it uses up all this memory. And so I have this little trick to turn it off, but I didn't use it correctly. You have to do that. Now next time I run it, it'll be better. Oh, how do you do it? I forget the correct syntax here. Changing the target makes that much of a difference. It's clearly a target that seems to work. It's so weird that the negative 3 doesn't work. Okay, one more. Fix two things here. Oh, it's a lowercase b. Lowercase base. And then state change. There we go. Okay. We want to stop, revert, stop trend, target revert is 0.3 and target trend is 0.4. So it's 0.444 and then the revert is a 0.3. Okay. And then the FT thresholds, he wants to use 3s. Likes the other way better. So odd. Oh, you know what? Yeah, okay. Going back to the 5-year test bit, huh? Tisk. So let's do this again. Close this tab. Just kind of try to do a 5-year backtest on this, 5-year optimization on this. See how much faster that goes when you have the save history turned off? I can probably go back to, there was another thing I remember doing on here that I was like, is this working? And I changed it, and I don't think that it made a difference, but I left it the way that it was. And that was, oh no, I already have that optimization set. Is optimized, is instantiated on each optimization iteration. No, should be fine. I'm not impressed with Xbox and smart TV apps. Most the built-in stuff that you get on a smart TV. Like, it's nice to be able to just have Netflix built into the TV and everything, but they're like almost always don't work as well. Right? Like an Apple TV is straight up better. Not that I've ever found one of those that was super good. Maybe I should try building a PC for that. Would be interesting. Sounds like that Congress is going to just split up the 3 different bits of the debt limit, the continuing resolution, and the disaster aid. So the issue that I'm having here is that I don't expect this strategy to be profitable. I want it to be degenerate. I want it to make a lot of profits in the short term and then blow up, is kind of what I want it to do. But I don't like the results that I've been getting here on this 3rd generation of it, because it suggests overfitting, which means, like, you start trading it and just it won't immediately stop working or something like that. Like, there's a problem with overfitting too, but that one's pretty easy to demonstrate. And I'm not trying to create a strategy that's overfitted, but we are kind of doing a few things here that are kind of like overfits. So if I go into these, I shouldn't be able to see like the analysis bit, right? Because I don't save the history. But I should be able to see the optimization graph against the FT threshold trend and the FT threshold revert. And that's a bit more like it. Where the revert likes 0. Well, and actually it looks like trend likes 0 as well. Weird. See, now if we want to see the detailed results, we say open a new strategy analyzer tab. It'll run and take a second here, but then we actually want to say save history. The other issue that I have with it is that I think that the result that I'm getting here is mostly mostly because of the fact that the S&P 500 tends to move up, right? That's the other issue. Okay. So I find it curious, though, that because when we were doing those other back tests, it was saying that having these at 0 was really bad. So what's with that? Takes about 1,000 trades, less than 1,000 trades per year. I think that's all fine. And let's just change these to zeros because it says that it's zeros. I think that this, you know, my yeah, let's do it. Let's do it. Okay, let me show you something. Walk forward optimization. -5 to 5-1. Yeah. Okay. So we're only changing these two things. And then we're saying, what has it been over this period? And then do it. Okay, forward. So let's see here. There's parameters for this, right? Optimizer period, test period 28. Well, let's just try it like that. So what it's going to do is it's going to say, it's going to like try it over 10, it's going to, over a 10-day period, it's going to say what works best. And then it's going to trade that for a month. And then, you know, it's going to do that over and over again so that that value can kind of change over time. And hopefully we don't run into memory issues here. I am still using a lot of memory. I do kind of think I need 64 gigabytes of RAM, man. 32 is not enough for what we're doing. Then I remember there's this whole thing that like if you use all 4 modules, you can't, there's like, you lose speed on that. So like we need to just replace the ones with bigger one. Anyways. I also kind of wonder, though, at that point, if I should just go and get 4, you know, like really max it out and get 128 gigs of RAM. That excessive? I've never tried something like that before. So I don't know. When I went from 16 to 32, that made a big difference. So at least in the back testing. So it kind of seems like the system wants to use 16 gigs and then the backtester wants to use 16 gigs. So like if I doubled it, that should be enough. So like quadrupling it shouldn't really do anything for me, right? Now, hold on a second. That's not right. That's curious. The walk forward optimization worked really badly. I need to think about that a little bit more because, like, I could be letting the short-term optimizer like overfit. It probably is overfitting. Like, I should maybe say this one can only be positive and this one can only be negative, or so. I don't know. Anyways, we can mess with it a little bit more Monday. We'll be here on Monday, all right, guys? So I will see you guys then. In the meantime,